Hello and welcome to the BioSyent Q3 results presentation. My name is Rene Gorham. I'm the Chairman and CEO of BioSyent Inc. I wanted to start with a disclaimer and remind the viewers and listeners that this presentation is for informational purposes only and should not be considered as an offer to buy or sell securities. No stock exchange is either approved or disapproved of the information that's in this presentation. It does contain forward-looking statements, and there are risks and uncertainties in our business, and results may materially differ from these forward-looking statements, and BioSyent undertakes no obligation to update publicly or otherwise revise any of the forward-looking statements in this presentation. On the first slide, I wanted to overview our sales results by quarter and for the 9-month period ended September the 30th. In the third quarter of 2013, our sales reached $2.328 million, and that was a 48% increase over 2012 Q3 of $1.575 million. For the 9 months ended September 30th, sales grew 53% to $5.66 million compared to $3.7 million in the year ago 9-month period. The growth drivers for the third quarter can be summarized as follows. FeraMAX brand, the base business, the base 150 business, continues to deliver strong growth. And now that it's flanked with FeraMAX powder, which was launched in June, the overall FeraMAX brand certainly was a strong growth driver in the third quarter. Cathogel is now gaining increased market traction. The units for Cathogel were up 94% versus the second quarter of 2013. That is sequential quarter growth of 94% for Cathogel. And finally, the legacy business has also delivered growth. Sales increased both in the U.S. and Canada. In the third quarter, units in the U.S. were up 33% versus year ago, and in Canada they were up 8%. On the next slide, sales for the 9-month period are summarized for compound annual growth going back to 2010. So you can see the sales have scaled from $1.2 million for 9 months ending September 30th in 2010 and have grown to the $5.66 million for the 2013 9-month period, representing a compound annual growth rate of 67%. That's overall sales. For pharma, we can look back for the last 16 consecutive quarters back to Q3 of 2009 as the base period and see that sales have steadily grown over that period of time for 16 consecutive quarters of growth. The most recent period representing growth from $1.684 million in Q2 to $1.844 million in Q3 of 2013. Our business mix continues to evolve. We had a strong quarter for the legacy business. So the legacy business represented 15% of overall revenue, whereas the pharmaceutical business represented 85%. Those are similar percentages to business performance for the full year 2012. The 2013 numbers represent obviously 9 months. But you can see over time how that's basically reversed in terms of the contribution of each of those businesses. Of course, our business focus is on developing the pharmaceutical business, and the legacy business is there to provide a steady contribution and contribution margin, but it's not taking any further focus and investment for growth in that business. Looking at our net income before and after tax, I want to preface my comments here by saying that the tax treatment in the comparable periods was significantly different. In prior years, prior to the fourth quarter of 2012, the company had significant tax loss carryforwards, which it was using up over the last several years of profitability. That continued through Q3 of 2012. So we paid no tax in the 2012 quarter. And looking at the income performance for that quarter, it's exactly pre and post-tax the same number. So $427,000 of pre and post-tax income in 2012 for the third quarter. In the third quarter of 2013, the pre-tax number grew 89% to $809,000. And of course, post-tax, we have a different number because we are now expensing tax in the in the current period ending September 30th. So that comes to $610,000, representing 43% growth over the prior year period, but being in a fully taxed expense situation. For the 9-month, similar comparisons apply. The 9-month 2012 numbers were $1,038,000 of pre and post-tax net income. And for the 9 months of 2013, our pre-tax income grew 77% to $1.833 million. And on a net after-tax basis, that was $1.37 million, representing growth of 32%, despite the fact we're tax paying in the current year period. Our balance sheet through this sales growth and earnings growth has continued to be strong and actually get stronger. A snapshot of the balance sheet will show you that on September 30th, 2013, the company had cash and cash equivalents of just under $3.2 million. We have no debt, neither long nor short-term debt, although we do have an operating line of credit with the Royal Bank of Canada to the tune of $500,000 available today. We've never used that line of credit, don't see a need for it at this point in time. We keep most of our cash in guaranteed certificates in the bank, earning some modest interest. You can also see that the total equity of the company over the last year and 9 months, starting with January of 2012, has grown from $1.16 million in the year ended December 31/11 to just under $4.3 million in the period ended September the 30th. So the business has continued to develop, get stronger, and our balance sheet has done so as well, and we've been able to maintain a very clean share structure and also stay away from debt. Management also is very disciplined in managing our operating expenses, certainly relative to our sales growth. For the quarter ended September 30th, our OPEX grew 28% in comparison to sales growth of 48%. And for the 9-month period, OPEX grew 41% compared to 9-month revenue growth of 53%. So that continues to be a focus for the company. We consider ourselves to be a profitable growth company, and it's our intention to stay profitable right through the growth curve. Looking at our earnings per share, YTD September the 30th, I'll start with a comment on the quarter. So for the 3-month period, third quarter, our basic earnings per share were 5 cents. Diluted, they were 4. And then we've got a graphic to show you the evolution of our EPS on a year-to-date basis. So 2011, 12, and 13. So in the 9 months ended September 30th, on 2013, our basic EPS was 10 cents, diluted 9 cents, and you can see that's grown from 8 cents and 7 cents last year and 3 cents and 3 cents the year before. Of note, the same comment that I made earlier about the tax treatment in 2011 and 2012, we had no tax expense for the first 9 months of the year. Our tax expense for the first 9 months of this year was 3 cents a share. So I encourage you to take that into consideration when you're doing a year-over-year comparison. On the next slide, just a couple of comments about events subsequent to the year end. So in October, the beginning of October, we announced the in-licensing of a new women's health product. This product is with a new European partner. So this would represent our third partner from Europe. The product in question is already approved by Health Canada, so it's got marketing authorization. It is complementary to our FairMax promotion activities, so some of the same targets that we would be calling on and detailing FeraMAX would be appropriate for this new product. So we've got some synergy and some efficiency in the sales investment. And planning is in full swing for this product, and we intend to launch it in the second quarter of 2014. Cathogel set a new monthly record in October. This October just passed, and that would be in comparison to all other months of this year and going back all the way to last August and June of 2012. Those months were sell-in months during the launch period, when you're typically loading or selling into the wholesalers, and the orders would represent larger amounts. So since those initial launch sell-in shipments of June and August of 2012, the sales that we did in October on Cathogel would represent our best month ever for that brand. And finally, in October, our total pharma shipments set an all-time record. The dollar value on pharma was up 25% versus our best previous month. So I just wanted to walk you through a description of our product life cycle, just to really highlight where do we stand with products in the market and products coming to market. So our process has got 6 steps. We search for products and go through identification, due diligence, negotiation, and obviously execution of deals to in-license products. We call that the in-license step. Once we are successful in that step, we would move on to a regulatory filing with Health Canada and working it through the approval process. And then when approved, we'd be in some of this, there obviously the timelines overlap, we'd be in pre-launch planning. And then we launch the product, and a product could stay in a launch phase depending on what are the activities in the field and the level of investment against that brand. And I would describe both Cathogel and FeraMAX powder as being still in the launch phase. Then it would move to a growth phase. It's when the brand is growing quickly, and then it moves on to mature, where we make less investment relative to the dollar value in sales and just maximize sales. We would, at this point in time, say that if a product is expected to have annual growth of less than 20%, we would describe it as a mature product. In this case, FeraMAX 150, we see continued growth available to us for the balance of 2013 and into 2014, and likely into 2015 as well, where we wouldn't consider it a mature product yet. So we have 3 products that are currently planned for 2014 launch. 2 of those are dependent on Health Canada approval. One of them is already approved, and as I've described, is being prepared for launch in Q2 of next year. I wanted to thank you for viewing this presentation and taking an interest in our company. I wanted to point out to you some resources that are available to do some more research. You can find more on our company at bioscience.com. All public filings in Canada are done at cedar.com. TMX Money is the TSX official site where you can get quote and other financial information, stock quote and other financial information. And if you're looking for product information, you can go to feramax.com or cathogel.ca. Once again, thanks for tuning in, and I look forward to reporting on our ongoing results and progress over the next several quarters. Thank you.